Hello and welcome to Investing Confidential. Today I'm going to talk about real estate and why we are now over the bubble in the residential real estate market. And obviously, we're seeing already the popping uh, of the commercial real estate market has already done. And both of these phenomenon, okay, real estate phenomenon, uh, and by the way, this is where most of the world, okay, individuals have their wealth in real estate, uh, and it's been this in the U.S. has been driven by Wall Street, both the bubble and the explosion or the popping of the bubble, just everything driven by Wall Street. Wall Street's greed, their willingness to do anything to create fees and gather AUM to charge more fees. And the bottom line is that uh, it's a scam. Okay, well, plain and simple. Okay, if you want to buy a house, buy a house. If you have money to invest in a commercial real estate, buy a small, you know, strip mall somewhere. But no individual investors should be, popping money into crazy Wall Street type of, you know, funds that invest in all these kind of crazy, um, development properties. I mean, this never works, folks. In the 40 years I've been looking at this stuff, it doesn't work. It works for a while and then it doesn't. And when it doesn't, as you'll see in a few minutes, it's gone. Okay, so this whole thing, real estate, Wall Street driven real estate scam is imploding. COVID has been an interesting. We're going to look back at COVID as a a point in time, a very important point in time for a lot of things in the investment world, uh, and certainly COVID has had uh, an immense effect on both the commercial and the residential real estate market. You know, COVID disrupted, causing home prices to artificially, and they have been artificially just driven through the roof, the highest ever, probably ever related to value in the history of this country. And COVID was the cause of the collapse of the commercial real estate industry. It may never recover, but the COVID was the accelerant because it was already beginning to show signs, but it was the accelerant for the collapse. So you know, and you look at this whole idea of remote work. Like remote work is not something new. Remote work was becoming popular before COVID, but COVID made it a trend. COVID, really accelerated the process. And the question is really, you look back at COVID. Was it real? Was it fake? Was this? Why did this happen? Um, but in the end, it doesn't matter because there is no returning to the past. There is no returning to the past. And the problem with the commercial real estate industry, if you're invested in it or you're watching it, is that these leases, okay, all of commercial depends on leases, right? Companies paying leases. These leases are just beginning to be abandoned. So, meaning companies, after COVID, they're still paying. Everyone's still paying their leases. The floors are empty. All right, they're either empty or 30% occupied. Don't believe any of the numbers you're seeing around the country. There's nobody going to work. All right, okay. There are pockets, some companies, but overall, there's nobody going back to the office as they were in the past, and companies are still paying leases. But as these leases come up for renewal, 100% of these leases are being either abandoned, reworked lower. 100%, not 90%, not 95, 100%. There is no company whose lease is coming due that's saying, I'll just renew for the same price. Not happening. So the value of commercial real estate is only a factor of the cash flow, right? It's all cash flow. So were some of these buildings worth billions of dollars? No. Well, maybe they were as a reflective cash flow. But as the cash flow comes down, the reality is these things are going to be down 50 to 80%, maybe even 90%. And who's going to take the hit? Well, in the case of some of the more popular or the largest real estate funds like Starwood, I mean, they're taking the hit. Okay. I mean, Starwood is one of these giant real estate syndicators. They're developers, they're real estate management companies. They've raised a lot of money in the past from investors, and they're very leveraged, and they're getting crushed. Okay, they're getting crushed to the point where they're in default in certain amount of their properties, and in turn, these properties are under these funds. So as you can see, I mean, these guys are getting crushed. Okay, absolutely crushed because people want their money. People, institutions, they want their money. They're asking for billions, and Starwood does not have billions. So what does Starwood do? They put up a gate. They say, no, we can only give you a little bit of money. But they're hiding the fact that if it was a URI, the bank would just take our property, we'd be done. They'd be, tapping our wages. We'd be in default, we'd be bankrupt. But for someone like Starwood, they just say, no, we're not going to let you take your money out. And we're going to just negotiate with banks, and we're not going to take your money out. But these funds are zero, absolute zero, because if they weren't, Starwood would let the money out. So these are illiquid funds. Real estate essentially is illiquid, and this is just the beginning. Okay, we're in the early stages, folks, as I told you, very early stages. And unfortunately, individuals run into funds, as you can see here. I mean, you're getting wiped out because of the leverage. Somebody like Starwood is not going to get wiped out. They'll lose a lot of money, whatever. The people, but in the end, they keep collecting fees. The people that own Starwood are filthy rich. It doesn't matter anymore. But individuals who, like sheep, followed their advisors' recommendations, their exposure to real estate. Again, Wall Street scam. This is over. Okay, absolutely over. And to give you if you want to know what what even the big money's doing, okay, look at Apple. Okay, Apple was planning to build the second largest campus outside of Cupertino in North Carolina. It's been known for years and years, and before COVID, they bought thousands of acres of land. Well, guess what? Gone. Pausing the plan. No. The plan is gone. So people bought houses to rent, to Apple people, to developers develop. These government was expecting big money coming in on taxes, all this. Well, guess what? Nothing. As a result of the pandemic and the collapse of the industry. Apple is a company with hundreds of billions in cash. Could they build this? Absolutely. But Apple isn't stupid. Apple isn't stupid. They understand how bad things are, and they're getting out. Whatever money they lost buying the land, irrelevant. It's nothing compared to what they would lose if they would lose everything. So let's say they built something that would cost 20 billion, 30, zero. So that's the situation in commercial real estate. It isn't getting any better. And probably we're going to see a lot worse. Okay. And that dovetails into the residential side. So look, all this is connected, right? Apple's not building, so Apple's not going to hire people. So people are now going to sell houses. People had bought spec houses. All this is tied into each other. And it's all also a factor of the consumer, right? So people buy houses when they feel confident. Okay, today, whether they felt confident a year ago, 2 years ago, 5, it doesn't matter anymore, because today the reality has if you look at the last GDP report, consumer spending collapsed. Again, folks, the United States is a consumer-driven economy, like all developed economies, but the United States in particular, because of our dependence on consumer credit. It's massive. The consumer economy is built on consumer credit. It has collapsed. I mean, these look, as I mentioned, they can fake all the numbers they want, and every number you look at is skewed to the positive. So when you see a number like this, it's worse, much worse. And as you can see here, again, these numbers are skewed positive, but consumer confidence is trending lower. Keeps every time it's look, these numbers go up and down, up and down. It's trending lower. You see it here. Consumers are just not confident, and they shouldn't be. Okay, and you could see it also in the state in retail. So when retail inventories rise like this, folks, and they're rising, this is way over pre-pandemic. These are dangerous levels. That's because stores, they can't sell their goods. So inventories are rising. So they're going to order less goods. That goes into manufacturing. That spills over into a lot of things. Okay. This is dangerous, but it tells you the state of the consumer and the state of the economy. And I know that when you look at now, you're looking at, recession. People been talking about recession. They've been discussing recession for some time. I've been discussing recession. But the realization is that, as you can see here, there's no getting around it. We are in a recession. There's zero chance that we're not going to be that we're not in a recession. But as we talked about, Wall Street, the media, the power elites, etc., they don't want a recession. They need the S&P 500 to continue to go higher. So they come out with numbers every quarter that are downgraded from the quarter previous. Okay, they just keep manipulating the numbers, manipulating. These numbers are not reflective of what's really going on in Main Street. And Main Street is in recession, has been probably for 2 or 3 years. And the elites don't care. Okay, so we're in recession. I don't care what anyone says. You can dispute my numbers, but this says it all. And these, again, manipulated numbers. They all skew positive. But the reality is, going back to real estate, especially individual single-family homes, is look at this. These are the buying conditions. Numbers like this really can't be manipulated. These are buying conditions are a combination of rates, prices, etc. This is the worst buying conditions for real estate in history, in U.S. history. Just think about what I just said. If you buy a house today, sorry, but you will, whenever you sell it, you'll sell it down, because this is the worst conditions in history to buy a home. You do not ever want to buy real estate in these kind of conditions. It's the worst. And so it's the beginning of the end. Okay. And so how do we know that? Finally, inventories, especially new home inventories. This is home builders, again, that drive the real economy. Relative to the last 6-7, they're rising fast. Again, higher than even pre-COVID. That's not good. That's good for prices. If you haven't bought a house yet, that's great for you. Just hold on. Housing starts are down. Real estate prices outside of New York and Miami are all cratering. But even in New York market, which is probably the most insane market, finally, this month we see signs of the crack. Okay, Manhattan becoming a buyer's market, meaning there's a lot more apartments, condos for sale than there are buyers. So prices have come down 3%. I think it's year over year, which is a big number year over year. But it's just beginning. It's just beginning. Okay. And these type of moves are multi-year. Okay. And let's even look at, the media knows what's going on. I mean, an article like this, especially with media that's driven by real estate agents, real estate industry, which is a big, big industry, you wouldn't see an article like this. But the reality is they're telling you. We've been telling you for a long time, but they're finally telling you. It's the top of the market. And, we discuss rents, which is part of the real estate market, especially what we call multifamilies, as you can see here. They were building a lot of multifamilies because, as we discussed, they want you to rent. The plan all along from the powers that be, whoever that is to make everyone a renter. They were building homes, multifamily homes, if everyone was going to be a renter. And that's gone too. That's gone. Why are they not building? Because the multifamily apartments that have been completed, they're empty, relatively speaking. Problem is, folks, that in real estate, you have these big run-ups caused by whatever. But the issue is that on the way down, history tells us it takes years to unwind after these spikes. Years. So COVID caused real estate industry to spike 3 years. 2019, by the way, was a horrible year for real estate, pricing-wise. So 2020 comes along. All of a sudden, you have this completely artificial event, COVID, spiking up, massive spike in real estate prices, 50, 60, 100%. And now that's popped. So those 2 or 3 years, it may take 5, 7 years to unwind because it's human nature. People think people look at Zillow and it's going to take longer. People look at Zillow, oh, my house is worth $2 million. I bought it for $1 million. It's worth $2 million. They'll put it up for sale and they're not going to sell it. The house, they're going to keep cutting prices for years. So this is just the beginning. But there's no way to cover this up, folks. Consumer, real estate weak. The economy's weak. Okay? I don't know if you looked at gasoline prices, but crude is breaking out. Gas prices are not going down like the press. They're going up. And, you look at the stock market, you say, well, nothing's wrong. That's because the S&P doesn't mean anything anymore. It's irrelevant. The S&P is 5 stocks, 6 stocks. Okay, this earnings period is going to be very important. But I don't think it's going to bail it out. Okay, so the S&P doesn't matter. And if it was up to the elites, neither would the American dream. Because they don't want you to own a house. But their manipulation is over. Prices are going to start coming down. And the American dream will be alive again. But it takes patience. So keep your powder dry. It's going to be a long unwind. But it's going to be favorable for those who are renting today at good prices and are just waiting for prices to come in. They are going to come in because it's inevitable. So, as always, investors, be careful out there.